Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is November 30th, 2017, and tonight's focus is going to be on corn. The ETF from Tucrium is called CORN, appropriately phrased, and it's a very good proxy if you're not familiar with trading futures and you want to trade the ETFs. The Tucrium, which is the name of the firm that runs the ETF that is corn, is a good one. Obviously, it emulates corn quite nicely. So what we have here is two things that I'm going to be pointing out. One is going to be short term for the futures traders looking for a little bit of a pop in the market, and then for the ETF type traders, a longer term position, and you'll understand what I'm talking about here. So what we're looking at here with corn is that we still have the trends, all of them, to the downside, and we have the technicals to the downside. But the technicals is something I'm going to be talking about here in a little more detail tonight. We also have the seasonals, and we'll talk a little bit about this pointing to the upside. And so therein lies kind of the story that we're going to be talking about tonight for corn. First of all, the technicals for the different markets all stem from 18. It's actually a little bit more. I have to add a few more things to the website, but we have at least listed here 18 different watch lists that are looking at the individual markets. And corn has moved from a blue to a more neutral over the last day, so it still has a bearish bias to it, but it has moved back into the neutral phase here. So that's what these little left and right little signals represent. And what this stems from is 18 different snapshots of where corn is. They're all looking for set conditions. Is it trending? Did it recently start to trend? Are the seasonals in the right direction? And there's 18 of these things. I won't go through them all this evening, but listed here on the right hand side are the watch lists, and there's little descriptions to each and every single one of these, and some corn will be listed on, some they will not be, but when you net look at all of these different watch lists, corn has come from the negative is moving more into the neutral phase. It's been progressing in that direction, in other words. So the fact that the deep dive still has it negative, this will be changing slowly over time, assuming the progression of what it is that we're going to be looking at here in the charts going to continue on. So here is corn, daily bars. We can see that the market, and I've talked about this before, the market has been consolidating, and just recently in the last 3-4 days or so has found yet another level of support. This is where this little cyan, it's kind of hard to see it here, but the cyan color is, and the market came down, it based, it stopped, and it is now beginning to reverse course. We had corn up a little over, well, basically a third or 2/3 of a point here today, and it has found a little bit of a support. It's going to find some resistance here. This yellow line represents the 50-day moving average, and essentially by the time it starts to continue to the downside in the next day or so, it's going to find this resistance that the market had found before, which is at 358. I'll just round it, 358 and an eighth, but 358 is really the level that the market is going to find a little bit of resistance to. Now, here's the interesting thing when it comes to corn at the present time. First thing is that corn, well, this will give you at least an overview of the open profit loss for all of the different markets doing well in Australian dollar, heating oil, a couple of the different equities, cotton's doing well. Where's corn? Here's corn. Corn's got a little bit of a profit going on right now. Let's go ahead and pull it up and look at the specifics. It has 4 different open positions. We've got 3 long and 1 short. So we're long a 60, we're short a daily, long a daily, and long a 45 minute. The 45 minute just went long the other day, and we have another long that just triggered today. So net, we got 3 long, 1 short, net we're long 2, and so it's not a huge open position profit, but it is obviously biased and long on the on its projection going forward. So what will take place here is if we take a look at the seasonals, I'm going to step back here a little bit and make the point that corn is the only grain market that has some seasonal accuracy to it. In fact, if we take a look at the seasonal top 10, you'll see that corn is number 3. We got lean hogs, which is seasonally strong right now, seasonally accurate, I should say, right now. Same too with the S&P, and corn is our number 3 market as far as accuracy. If we actually take a look at corn, and we look at the accuracy, come down to corn, after we look at all of the markets from the accuracy point of view, what you're going to see is a market that is due for a bit of a pop. This is the 5-year. It's still for the next day or so looking at the downside, and then a little bit of a pop to the market. The 10 years are looking for a little consolidation, a pop to the market, fairly strong into the end of the year. Again, with the 15-year, a little bit of weakness to the market, and then a pop into the end of the year, and then the same thing for the 20-year. So herein lies the difference that for the ETF from Tucrium, the corn, C-O-R-N ETF, that's one that is really looking for a little bit of a longer turn pop to the market, assuming that we can break through that resistance level that we're running into, or will be running into here fairly soon. On a short-term basis for the futures, it is looking for a little bit of a pop to the market, a nice little surge to the market that is going to occur according to the seasonals early part of December and really end just a couple of days later. So that pop for the future side is coming up here sooner rather than later. So where we stand then right now is there's a distinct possibility that we're going to come up to this resistance level, this one that I was looking at here just a second ago. It'll also probably run into the 50-day moving average, because it typically does, and then there's a possibility that that there could be a follow-through. Excuse me. There could be a follow-through here with the market, and we could really start going up to this upper resistance level right up here, which has just begun. So the point is that we have low energy, and has been low energy for a period of time, where the market has been consolidating. It's wound up like a spring and ready to make some type of an explosive move. This is where the longer-term ETF really comes into play, the corn, C-O-R-N, corn. And then on a shorter-term basis, we could see a little bit of a pop up to the 50-day moving average, and there above, coming up to this resistance level that we're looking at right through here. I know it's only a 5. I haven't talked about the strength to the support and resistance levels in the recent past, but this 5 represents something that is just emerging. It is something that we should be looking at, but nothing like a 25 or a 50 or a 29 that we see over here, because it's just beginning. But this will be the key level that we're going to be looking at, and if we can break through this level, this again for the longer term perspective, then we'd be looking at a surge up to this upper level, this further resistance level. So bottom line is that we're in a point of contention where the market is wound up like a spring, ready to make some type of an explosive move. Based on the seasonals that I showed to you, the expectations would be for it to be more to the upside than to the downside. Explosive move doesn't tell us which way it's going to go, but we would be expecting some type of a move potentially to the upside. So let's see what does take place. I want you to focus on corn and realize that the systems themselves are long the market. We're anticipating some type of a move to the upside, And from that standpoint, on a short-term basis, on the future side, the pop could be explosive and good, and obviously quite profitable. And then obviously on the ETF side, using the seasonal tendencies, obviously they are looking at more of a consolidation, a little more sideways to bearish consolidation, but nothing too strong. And we would expect nonetheless a market that's going to really pop to the upside here over the longer term. So that being the case, watch corn. Let's see what does take place, and hopefully the systems will be able to take advantage of the markets. And we'll take a look at another market tomorrow. Thanks very much. Bye bye.